Viewers, let's move on and let's put the spotlight on Maharashtra Seamless, another result candidate. But what's the outlook going ahead? Let's try to decode that with Mr. Kaushal Bengani, who is the Deputy General Manager, Investor Relations and Finance at Maharashtra Seamless. Hi, very good morning, and thank you so much for your time. And firstly, let's talk about your numbers then, because the numbers look to be quite steady this time around. Help us understand how are the internals looking like. Your revenues have seen a decline of almost this time around. How are you reading into the numbers?
Thank you for inviting us, firstly. On the numbers front, the revenue that we have achieved in this quarter has been broadly similar to what was achieved in the previous quarter. However, margins have seen a decline. This is primarily on account of two factors. The first factor is the impact of Chinese dumping in the seamless pipes industry. That continues unabated and is impacting the industry as a whole. The second reason for the decline in margin was the notional adjustment on account of IND-AS standards, which we have to do at the end of every quarter. So what had happened was that prices of raw material declined by around 8 to 9% in the second quarter. And at the end of the reporting period, we have to do a revaluation of the stock. So the effect is largely notional and tends to reverse in the subsequent quarter when the inventory is converted into pipes and dispatched. These were the two main reasons for the decline in margins. The encouraging things about the performance in the quarter are firstly that the tonnage that we have dispatched, that has not declined. And secondly, we have been able to increase our order book by 20% from 1130 crores to 1378 crores.
Order book indeed has risen by about 20% on a year-on-year basis, but two-part question. One, with respect to domestic demand, how is that shaping up? And when it comes to export demand environment, Middle East, US, how is the demand environment over here? And is US tariffs impacting your demand?
On the domestic demand front, there has been some slowdown in the oil and gas sector expenditure because we primarily supply to the oil and gas sector. That has been continuing for quite some time. On the export front, the export market started to improve towards the end of the previous calendar year. However, on account of the tariff tantrums that we've seen, that has not continued and export markets remain soft.
Along with that, help us with the outlook on the margins as well, because from like 18% last year, 10% is what you have been reported. We do understand the concerns and the factors that are at play you just highlighted. But when can one expect a rebound? What's the growth outlook on margins, on revenue from these levels?
Margin comparison on year basis is not so accurate because we are impacted by the fluctuation in crude oil, since most of our products are dispatched in the oil and gas sector. Therefore, the forecast for oil, which was present in previous year, may not be so relevant right now. Margins have declined from what they were in the previous year, but our reading of things is that since order book has increased and the notional effect of the inventory revaluation will reverse in the subsequent quarters, then margins are expected to improve. To what extent, we'll have to see, but definitely from the current levels of 11% margins, we should expect an improvement in the subsequent quarters.
Margins are expected to improve sequentially. Domestic environment, demand environment is weak, but export continues to remain strong. That's the word coming in. Mr. Bengani, thank you so much for
No,
taking
sorry, I'll just interrupt you.
Okay,
Export
sure.
is not strong. I mentioned that exports are soft.
Okay.
Domestic demand is good.
Okay, understood. We get that point. Thank you so much for taking